Alright folks, welcome back. It's going to be a very short video, but it's going to be kind of like this style of teachings. They're going to be 10-15 minute trainers, so that way you can train your eye to start seeing price action. A lot of you don't have the access to recording live data, but I'm going to help bridge that gap for those that don't do that. And for others that just don't want to be bothered with it, this is one way of helping you do that, with me recording specific elements of New York session and then using the ideas that you're learning in the mentorship. Now, what I'm going to be showing you here is basically if you were to be sitting in front of the price charts as they were trading live, okay, and what's the price movements moving higher, lower, real time, things that you should be identifying, things that you should be leaping off the chart over time. Now, if you don't do it right from the beginning, obviously that's nothing to be discouraged about because you're learning, you're developing. But the point is that you want to be striving towards doing these things because it will give you, number one, tape reading skills that have to be acquired. It's not a watch a video and then you understand how to do it. It's you watch price and then over time you'll understand what you're doing and you'll understand how to read it and what it's likely to do next. So just for framework here, we're looking at the British pound on the left-hand side here. And this is basically framing out today's daily range with the 15-minute time frame. Overnight, we had a run up into the 3 o'clock high, London Open. Trades up there, breaks down, comes right back up into the order block here for an optimal trade entry. Time of day here, 5 o'clock in the morning. That is the end of the London Open kill zone. So we have optimal trade entry there, and then it breaks lower right here on this drop. Now, once this occurs, that means we're breaking below this low on that candle. We're trading it 7:30 in the morning below that low right there. Once it trades below this old low, it can always retrace back up into the structure that was formed during London. We have price do that very thing here. It trades back up into the bearish order block there for another optimal trade entry here. From high to low to high. So at the butt end of that candlestick's body, or the opening price extended out in time, this time of day here is 10:15 a.m. So that is still New York Open. The market drops from there and attacks what? We have these relative equal lows with the higher low to the right than that of the low here on the left. There's sell side liquidity resting below there. So you have two different opportunities here. And I want to kind of draw the distinctions between the two. There is one here. This is a bread and butter setup. Okay, so whenever you see me doing these hyperactive intraday trading examples and illustrations that you see me do on Twitter when I used to be on Twitter, and some of the videos I still have on my YouTube channel, and the things I've done on my Telegram channel, this is a opportunity that you see many times being shared from here to here. Now we have a swing low and we have a swing low there, and it runs down into, now watch what's occurring here, from here at 6:45, and then we roll over into the beginning of New York Open. Notice that we have a fair value gap there that it trades up into, and then it rolls over in the beginning of New York Open, 7 o'clock in the morning to 10 o'clock in the morning. This move from here to the swing low here, that is a bread and butter setup. That's a very simple, easy 20 pip, 15 pip setup where you go in, you take your surgical strike, and you walk away. Okay? You can utilize that type of entry to try to trade with the daily range. Now, what's the difference between this trade here and here to this one here to there? This is a day trade. This is a scalp. What's the distinction between the two? The changeover from London lunch between 5 a.m. and 7 o'clock in the morning, that if it starts your move there, always anticipate the likelihood of a retracement that goes back into London's market structure. That being over here, and we see it run up into that during the New York Open kill zone. I recorded live price action as the market traded up into this fair value gap and then dropped down below the short-term low. I want you to think about how you as a trader are wanting to trade. Are you trying to get every single move? Then you need to start thinking like a scalper. That doesn't mean you're going to get every single move, but if you're looking for methodical entry points and working within a daily range, you're going to be looking for the continuation of what was established in London Open. And we have here optimal trade entry in New York session, and then running for buy-sell liquidity and a rejection block. This whole sentiment being bearish here is set by this return here, and then starting to rally, and then crossing over into New York Open right here on this candle. So we've come down, rebalanced all this area in here. We took out sell side liquidity there, and we came back above and was trading above this premium high of this imbalance. The likelihood of the market trading higher, I mentioned that yesterday in Sunday's video. We have buy sell liquidity here, and it may draw up into the 92 big figure and reach above into its old high. The market did in fact expand here, traded right back up into the last up close candles consecutive, these last three. That's your bearish order block. Now, why am I referencing that? What's so significant about that? Well, look at all the bodies and then wicking down, body, and then wicking down, small little body, and wicking down, and then starting this candle right back up in here, and then we have displacement on the downside. So cut through all this chaff and go to the key turning point, which is this premium array, which is the bearish order block that turns at this price level here at 92.13 and then drops off. So we have buy sell liquidity, bearish order block. We've already filled in this area here, so that's taking us back into this market structure here. It's bearish, but the distinction is there's two types of trades being formed there. There's two different approaches. The fact that we just changed over from London Lunch to New York Open, that will be a signature that indicates that it's likely, if it starts to run lower after filling in a small little PD array, like we have here, this fair value gap, when that fills in, it can run these sell side liquidity pools, but if it does that, it will likely retrace. Remember, the kill zone is 7 a.m. to 10 a.m. So if it starts right from Jump Street, right running into the liquidity, that means it may want to do what? Retrace and create a larger optimal trade entry to get in sync with that daily range, because London's creating what? If we're bullish on dollar, London will most likely create the high of the day in cable and or Eurodollar. So we're seeing that framework here, and then we can anticipate the erosion that takes place over the entire daily range versus something like this, where it's a small little surgical strike. You get in, take your pips, get out, then anticipate a retracement. You don't necessarily have to take these types of trades here, and you might excel in these types of moves here, and you just watch these unfold, and they're just not participated by you. And there's no shame in that, because you're distinguishing the setups that you want to take and the ones that you might see come to fruition, but you just aren't comfortable with it. That's developing as a trader. That's understanding what it is you're looking for. And never be discouraged if you see other folks, eventually when you're a charter member, and they are sharing their ideas about what they think is optimal for them as a trader. They may not see things like you do or gravitate towards frameworks that you found comforting. It doesn't make them any less efficient. It doesn't make you lesser of a student, okay, or more astute of a student. It just means that you have different approaches to framing your setup, but as long as it's rooted in sound logic, the things I'm teaching, then there it is. You know, you have nothing to be upset about. No one should be argumentative about it. All right, so the other bit of business here is the euro dollar. All right, so we have this imbalance in here. Now, the reason why I'm showing you like this is because I'm going to take you into live charts and the importance of having these levels on your chart. Otherwise, you're not going to understand what it is you should be anticipating or what you're studying. So initially, it's okay to have a naked chart, maybe a couple annotations, and then watching what price does during the kill zones. But over time, you want to absolutely have things mapped out on your chart so that way you can see what should be respected, what is it likely drawing to, you know, those types of things like liquidity pools, imbalances, and such. We have sell side liquidity here and here, and I mentioned this in Sunday's video, so it's not like, you know, I'm going back and saying, look, this is after the fact and look how smart I am. Hopefully, I've earned the right to be able to talk like this, but nonetheless, we have the imbalance here and here in the form of sell side imbalance, buy side inefficiency. The market trades back up into, for institutional order flow entry drill, right there. And then displacement lower and attacks the sell side there. And attacks the sell side there. Now you're going to clearly see in the recording, I have the chart set up so that way you can see the expansion on the downside and the dollar expansion on the upside. Okay. So when you watch the euro dollar trade lower, attacking the sell side liquidity here, here, and here, the only thing I have on the chart is these two blue lines. Okay, but I'm showing you the logic behind the scenes after the fact. But I want you to study price just like you would if you were watching it by yourself in your own chart. Naked. Just having some simple reference points. But I want you to focus primarily on this discount low of the sell side imbalance, buy side inefficiency. It runs the buy side liquidity there. And watch the sensitivity around this price level here at 1941.5. Okay, remember that when we go into the Euro live chart, 1941.5. And then it attacks these sell side liquidity pools. So let's go over to the live recording of price action, and we'll take a look at cable first. All right, so here we have the British pound on the left-hand side and dollar index on the right. And what you're watching is this fair value gap right there. And we've already worked down into this order block here, trading back down into it here. And remember, we've taken the sell side liquidity over there. And this return was back down inside that hourly imbalance. So we rebalanced here. Now we're going to watch this expand for the buy side liquidity here, reach up into that 92 big figure. But watch how it stabs into that little area right there. And then you'd be watching this low and this low. Right now, that's a short. Right there. That's a sell. And your stop loss will be right above this swing high here. And when watch, and obviously this is being sped up. You can see the time over here rather quickly. But that would be an entry for a scalp. And notice the time, it's 17 minutes after 7 in the morning, New York time. So if we expand on the downside, which is more likely because we've already had the high likely filmed on the London session, we had a break lower, retrace, rebalance, all of this, and we had an attempt to go higher than this high here, but we didn't. And then we broke, created a small little fair value gap, then it came right back up in and filled that. So now since it's done this, we're looking for the expansion on the downside as we're seeing now. In the first short-term low around that 138.95 level, then the next one just below 38.90. And you'd be watching the short-term low at 38.90, and as it trades into that, you would just collapse your short at the market. Or you could use a limit order, but usually when I'm scalping, I like to do it manually. I like to get it gets me closer to the market, meaning that I have a better or closer feel for what price might be doing. And I like to watch the candles as they run right into a low or into a high if I'm bullish. And you've seen this in many of my examples where I'm taking the trade exits as it's doing, like what you're seeing right here now at cable. Right there, that'd be the perfect opportunity for me for just moving to the sideline and saying, okay, I'm done. That would be a bread and butter setup. Now, it's not a lot of pips. It's not an end of, a massive slide in pips, but it's surgical, it's logical, and it moves from fair value gap to sell side liquidity. So see, what we're doing is we're taking a premium array and coupling that with a discount array. We're running up into an imbalance that needs to be filled, which creates a short-term revolt condition. Then we're riding that lower and we're getting out where other sell stops would be. So there's willing participants to be counterparty to us wanting to be a buyer because we have to buy back a short. Where do we find buyers at a low price? Underneath short-term lows. So that would set up that context for, or framework for that small short-term bread and butter short. So there's no reason for us to worry about trying to get massive moves when you can find something like this where it's surgical and you can see the dollar index is expanding as we would expect to see it, and everything here is logically framed on the things that I teach you, but it's done with a small time frame and a small scale of what price action frames that narrative. We anticipate the dollar index is likely to run up above that 91.90 level, maybe reach into the 92 big figure. Could expand if it's a runaway move, get up into that 92.15, 92.13 level. But by itself, that's enough to take a payday out of the marketplace. That's enough to pay the rent, if you will. Okay? Trying to change your perspective about getting rich or making lots of money and starting you on the right path to finding consistent profitability. That's what I'm trying to more or less direct your attention into now, because once you find these types of setups, the anxiety that you feel or the uncertainty that you feel about, I'm never going to get this, these big moves, I'm missing moves. These are the moves that you should be focusing on right now. Okay, whether you want to be a scalper or not, this is what's going to help you see it on every time frame, because this is the same thing that's occurring on a daily chart. It's the same thing, folks. It just takes days for the chart to pan out. It's happening also on a weekly chart. So if you want to be a position trader, you can do the same thing there. Or if you want to be a short-term trader, you can see the same thing on a 4-hour chart. Day trader, you can see it on the hourly chart and 15-minute time frame. But for 15 and 5 minutes, that's scalping. And having that mindset helps you find these bread and butter, everyday run-of-the-mill short-term volatility trades that are linked to things that I teach you relative to the PD array matrix. So if I hadn't already taken my exit, I would be doing any expansion on this candle here. Right there is where I would have more or less closed it as it created that right there like that. That's how I like to close. Now we're going to watch the euro dollar over here. Now remember that 119.41.5 price level. So watch euro dollar on the left hand side. You can see the dollar index on the right hand side trading down into its bullish order block, so it should expand on the upside. But watch how euro dollar trades up into that 119.41.5 level. Then price moves lower and attacks the sell side liquidity. And there's two blue lines I mentioned at the beginning of this video, and also drew your attention to in Sunday's video, where that sell side liquidity pools would be layered. Remember that I was telling you there's layered liquidity below those lows? That's what those blue lines are basically drawing your attention to. So euro dollar is starting to slide lower. Now, without having that hourly imbalance and focusing on that discount low at 119.41 and a half, you would never know what you're looking at, with the exception of taking out those relative equal highs on the euro dollar. We went above that a few candles, consolidated and held just underneath that 119.41 and a half level. It banged up against it a few times, and then we have displacement on the downside. So right away, your eye should be looking for where are the sellers below the marketplace, because that's what the interbank price algorithm is going to be reaching for and driving price down into, to allow and facilitate interbank traders to take profits on any short positions. Now, this obviously is sped up to some degree, but not as fast as the cable chart. But I'm watching price as it's sitting in here in the euro, and we're inside of the original consolidation right after running those relative equal highs. Now watch that dollar index on the right hand side. Everything's in place for the euro dollar to go lower, because that dollar index should vault higher. It should be running aggressively for that 91.80 level, 91.90 level, because there's buy stops resting above that dollar index high. Now, at this moment, it should expand and have relative ease on the upside for dollar index, and lower expansion on euro dollar. It shouldn't be any kind of hesitation. It shouldn't have any kind of reluctance to go lower, and it should attack with large candles. Okay, so right now you can see that we've been in small candles. Now there should be large candles, and it should be going lower, and you can see that forming here. Now, when I'm watching price like this, I'm not really staring at the price marker that's showing, what the actual close is. If the candle were to close at this moment right now, I'm not looking at that. What I'm watching is, are the signatures that I'm looking for in price being shown in the delivery, and is it gravitating towards those blue lines where sell stops are resting below them? And right now, it's doing exactly what you would expect to see: expansion on the downside, attacking those sell stops. So this would be a point of partials if you were short. And then you would look to see if it can trade below that blue line, which it does here. That would be an area where I would take a partial as well. And then you would want to see it stay bearish and allow the dollar index to rally higher. And then does it give you the opportunity to get out with a partial below that second lower blue line on euro dollar? And right there, that would be a partial as well. So that's what it would be like watching price, just having sell side liquidity pools marked out, using the bias that I'm giving you in the commentaries. I'm not giving you trades, I'm giving you bias, and I'm pointing where your focus should be. And then you go into the charts and you watch these things live. That's the part that's the work. This is the thing that the unsuccessful traders and students of mine don't do. When they don't do it, they assume that I'm not teaching well enough, I'm not giving all the secret sauce out. This is what you're supposed to be doing. And over time, you start picking up on things that are done in price action that are just, well, until you study it live, you won't see these things. And you won't see the characteristics of small ranges becoming large ranges. And it's doing that large range because it's running for that liquidity. It's not mysticism that leads to me understanding when it should do these things. Granted, you don't see me entering a trade here, but you can see the charts lined up Everything's scaled so that way you can see the expansion on the downside. And it's exactly what I anticipated and talked about yesterday in Sunday's video. I wasn't talking about Eurodollar going higher. I was talking about Eurodollar running for those layered sell stops. Okay, and these are the levels that were there. And using the things that I teach you, this is what you should basically walk away with each day, gleaning one more piece of understanding and getting more depth of understanding, because you're looking at price live, you're ingesting it, you're seeing what it's doing and how it's reaching for liquidity, it's running back for an imbalance, or it's taking the other side of the marketplace liquidity. So it's working both sides of open float. Whereas open float was outlined to you yesterday for Eurodollar in the layered sell stops defined by these blue lines. And here I'd be done for the day because we traded up into that 92 big figure. And I would basically be done. Why? Because it's non-farm payroll, it's Monday, and I might be wrong. I might be wrong about holding on to this position longer term because it's non-farm payroll, and I want to make sure I pay myself. The premise is bread and butter. Get in, get paid, keep it. Don't offer it up with interest later on with another trade, or hold on to the position too long, because you could either get caught with a reversal, or it can pull back in such a degree where it holds you in a marginal profitable position that becomes a stressful position altogether. And there's nothing worse than being in a trade that offered opportunity for you to get out with profits, but you don't get out because you're holding for a longer term, or not a longer term, but a larger PIP objective, because you want something more, the greed aspect. So partials, working with weekly profiles, understanding the importance of paying yourself, especially on non-farm payroll weeks. It's Monday. Nothing says that it's going to be a good day Tuesday and Wednesday. Nothing says that that's going to happen. So if you have the opportunity to pay yourself on Monday, get it, secure it, and move to the sidelines. Then it frees up the whole remainder of the week, really, that you don't have to do anything. You've paid yourself. You've given yourself pips. You've given yourself experience. You've taken action. You've engaged. And there's no reason for you to feel like you have to do something now, because you have done what your job has been. Find an opportunity, frame risk, execute. If it offers opportunity to be profitable, you engage at those levels. Partial, done. Everything here is what you're monitoring over live charts. You may not have every annotation on your chart. In the beginning, like I said, you want to have a naked chart. Just study what it's doing. And then at the end of the day, go back into your chart and figure out what it was doing. And then over time, by doing that, you're actually training your eye to see things like you see me doing in my trades, where I'm actually getting in and getting out. All those things, they may be inspiring for you, but many of the students here will say it's neat to watch, but it doesn't feel like it's obtainable for them because I'm doing it so consistently or precise. So to teach you how to get to that level, it's doing these exercises and watching price action. And even if you can't watch it live, find a way to record it. And if you can't, that's okay, because I'm going to be giving you these little segments here. It's not equivalent to watching the entire New York session or London session, but it's the closest thing I can without burning up my entire day. So hopefully you found it insightful. Until tomorrow, be safe.